if these guys that are in power that have gotten us into this mess to begin with remain in control, and you don't vote different because you vote with your purse, people, you vote with your purse or your wallet, as it may be. If you don't protect yourself, nobody's going to do it for you. And it's gold and silver as the foundation. It needs to be, because I don't know about you, but I work really hard for my income and my money and my wealth. I don't want it to go away, and I don't want it to transfer, and I don't want those central banks to have the ability to stop me from accumulating wealth and protecting my family. That's not okay with me. It's not okay that they rob the purchasing power from what we all work for and attempt to save. And then the only way, I mean, like, I love this. I love this. What are they talking about on the talking heads on Bloomberg and CNBC and the news people, Wall Street Journal, all this, right? Well, go into these stocks because they'll protect you from inflation, because they have the power to raise prices. Except what people are missing is, what are you going to convert those stocks into but this garbage? So the dollar is losing its position. And goodness gracious, you can buy oil with yuan and even with rubles. Okay, or maybe with rubles, we'll see. And what they say in here is it reflects the active portfolio diversification by central bank reserve managers. So it's the central bank reserve managers that are going, bye-bye dollar. Nope, we don't want it. Now, if you live in the US, you will be most impacted by this trend more than any other country, because all those dollars, there's just no more demand. Honestly, that's what I'm trying to help you guys understand. The broadest base of functionality, because it is the only asset that is used across the entire spectrum of the global economy. It's the flight to safety asset for that reason. Please tell me, who knows more about how they are destroying the currency than central banks? A 31-year high. The presence of the dollar in foreign exchange reserves is falling in contrast with the growth of gold. In 2020, the currency by currency ratio of the dollar fell to the lowest level in a quarter of a century, and gold holdings rose. As of September, the reserves were the largest since 1990 and up 15% from a decade earlier. So they're getting rid of these, and they're getting this. I personally always think that you should do what the smartest guys in the room on any given topic are doing for themselves, and nobody knows more about how they're destroying the currency and how they're moving into position to maintain control of the monetary system. Recession does not strengthen the dollar. What it does, you can have one currency against another currency, right? So it can be the US dollar against the ruble, and we could put the chart up. But by design, since the way that that money is created in the system is by debt, and when you have debt, you pay interest on that debt, that erodes the purchasing power value. So when you hear about a strong dollar, they're referring to it against rubles. So if Russia could still actually export to the US, then in theory anyway, their products would be cheaper, and it would seem like your purchasing power was more. Kind of like when they first created the agreement with China, and China became the manufacturer to the world, and you were getting all of these products a whole lot, seemingly a whole lot cheaper. If the Fed wins, you and I will lose. The 5-year and the 30-year bond yields had inverted. Well, today, just before I came on air, the 2- and 10-year yields inverted. Now remember, that has always historically been an indication of a recession. But if you listen to the talking heads on TV, number one, they'll tell you that this time is different. Number two, they'll also tell you, but we have so much time between, and those markets are gonna go up, and the market popped. Why popped up? Why do you think that happened? Oh, maybe because it'd be harder for the Fed to raise interest rates and run off their balance sheet, knowing now that this major indicator, which we've been talking about since January, has finally inverted. And this next piece is not just going to be a recession. It's going to be the mother of all recessions, because in the past, they've had more wiggle room on their balance sheet. Hard to believe, I know, but since 2010, it's like inflating a tire. And they also, well, they haven't had wiggle room in interest rates since 2008. And when they attempted that in 2016, it ended up being a big fat fail. You need to be prepared, because this is significant and maybe even critical, because they will use the only tool that they really have. That's all they have left. That's all they have left. So what we're dealing with is a race for control. This is a confidence game. We have to have confidence in the system, and that is going away very rapidly. The higher the inflation, the worse the loss of confidence. So let's just kind of do an update. This is from a recent Federal Reserve publication, just generally talking about, for a nation's economy to function effectively, its citizens must have confidence in its money and payment services. The Federal Reserve, as the nation's central bank, works to maintain the public's confidence by fostering monetary stability. That's what they call monetary stability. And financial stability, which is boosting the stock market. And a safe and efficient payment system. 1 trillion times zero is zero. So stocks and bonds and all of that other garbage will not protect you from the demise of a currency. Just ask those people in Venezuela. Just ask those people in Zimbabwe. Just ask a lot of people that have lived through it. Food, water, energy security, barterability, wealth preservation, community and shelter. Community is what this is all about.